Hello, this is Dale. Let's continue our education on my three principal method of trading. This is a laser-focused system to unlock profits from any markets: stocks, options, ETFs, Forex. Let's continue our discussion with part 8, finding, entering, and exiting a trade. Again, my name is Dale Brethauer. I've been trading for more than 35 years. This is how I've made my money, how I make my money. I'm not a teacher that doesn't know how to do. I'm a doer that now has a great passion for teaching people how to be a success in this very difficult arena. I've been a guest speaker at many financial platforms. I've written 3 financial books. I am the head trader, coach, mentor of the website that I founded, www.optionsinfinity.com. This is what I believe is the very best options education website available today. We focus a lot on vertical spreads, especially credit spreads. I think credit spreads are the absolutely best way to generate a consistent monthly income. I follow a small market basket of stocks. This is a laser-focused basket of vehicles that I use for monthly spreads. I look at Amazon, SPX, Google, and the RUT. I call them the big 4. The reason I focus on these 4 is that they're high priced and you get very good credit when you set up a monthly credit spread. For weeklies, I'm looking at the SPX, and for Forex, I kind of focus on one of the myriad of pairings you can use. I look at the US dollar versus the Japanese yen. Lately, we've also been looking at leaps on vertical spreads. These are credit spreads that I put on with about 100 to 120 days till expiration. And for that, I use a market basket of what I consider financially strong stocks. On the website, you can see the list. As a member, you get the list every year. Every March, I come up with a new list. Doesn't vary that much from year to year. I'm looking at financially strong stocks that have good cash from operation. They're the best of the best in the market sector that they are. And we've been using those for our vertical spreads for leaps. Let's take another look at our if-then walkthrough, entry to exit. The first thing I'm looking for is the price to move within plus or minus 1 to 2 standard deviation on the regression channel. When it does this, I consider it to be overbought or oversold. Usually at that point in time, the price will revert back to the mean. Sometimes I'll get in, especially for weeklies, when it does reach the plus or minus 2. However, for the rest, I usually wait for a measured move to occur to make the entry. Caveat on that is if the price continues to trend and has a pullback followed by a measured move, that's a secondary entry. And this is where most of my entries occur. One of the beauties of this strategy is we know when we're going to exit before we make an entry. We're going to exit if we get a measured move opposite the trade. For a loss, for a profit, we're going to look at letting our profits run and targeting on the Fibonacci prices, usually the 127, the 161. And we can preset these, especially on Thinkorswim. They have a create an alert where you can preset where you want to exit and it will alert you. This is a rock solid strategy to enter and exit the trades. So let's kind of go through it step by step on the entry to exit. The first thing is we want to look at finding the trade. And that is when the price moves. Usually I'm looking for it to move plus or minus 2 standard deviations on the regression channel. Here we have the SPX weekly. I'm looking at the 30-minute chart. You can see that it came down to the -2 and actually came out as an outlier. This would be a great place to come in, knowing that most of the times the price will revert back to the mean. When it reverts back to the mean, it usually overshoots. And a lot of times this is a good time to get into the opposite direction. This would be a bullish trade, a bull put. This would be a bearish trade, a bear call. Sometimes I wait for a measured move to confirm that the price is indeed reverting back to the mean. Here is a measured move that occurred. This was the low. This is the intermediate high. This is the higher low. And then it reached a higher high on the opening this day here. You could have gotten in down here. You could have gotten in right here. Both of them would be profitable. I chose to get in right down here. We're in the SPX on February 4th, 2020, with a bull put where we sold the 12 February 31.75 and bought the 31.70 for protection. When we put on weekly vertical spreads, I'm usually looking at a 5-point strike price difference to set up the bull put. For that, we got 80 cents credit. So we're in. Now we're going to look to see if we have a measured move against or if the profits run to the Fibonacci's. And I can preset these because I had a measured move. I come in and I click on the low to the high to the higher low, and automatically Thinkorswim puts in the 161. The 127 was down here. When it reached this point right here, I decided to exit. And that was the next day. The next day, because of this big jump, it went from 80 cents down to a dime for a profit of 70 cents or 87% on this very quick move. You could have gotten in here with even more profit. If you want to be conservative, you wait till the measured move. I usually do this for the monthlies and the leap vertical spreads, buying stock, usually buying Forex. I'll wait for a measured move. Sometimes with the weeklies, I'll get in when it has an excursion to the plus or minus 2. Now let me show you a loss. We've spent a lot of time showing you profitable trades, and I spent a lot of time talking to you about there will be losers, there will be losing strings. But one of the beauties of this strategy is we cut our losses short and let our profits run. In this particular case, PepsiCo was up between the +1 and +2 on the regression channel. Here, it shows that we could have bought PepsiCo at 117 after a measured move to the downside, or you could have bought it up here. Usually when buying stock, I will wait for a measured move. And that measured move occurred right here. That point in time, you can put on the Fibonacci's. I was expecting it to come down to at least to the 127, 161. That's not what happened. It came down, was looking good, and then all of a sudden it reverted back up. And it actually made a measured move against us. And when it makes a measured move against us, we exit the trade. It's just that easy. We've got, even before we enter, we know when we're going to exit, either with a profit or a loss. Very little anxiety with this strategy. You're in total control. You're not going to let things get away from you. Let me just share with you the percentage returns, and I want to look at more recent than, we've been doing this for 10 years. These are more recent profits on the monthlies. We've had 74 trades over 3.6, the last 3.6 years, at a 73% rate of winners. And we usually win more than when we lose. On the weekly, the SPX index, 123 trades over the 3.6 years period, 76% winners. Forex just recently, 24 trades over 1.1 years, 78% winners. This is an extremely profitable, conservative strategy. If you found this video helpful and you like this and you want to see more, I would suggest you go to our website, www.optionsinfinity.com. Here is our home page. If you scroll down on the home page, you can actually get a free PDF guide that goes into a lot of the things that I've been talking about here, but then you'll have a hard copy of it. The nice thing about becoming a member is it's a monthly fee that recurs, but you can cancel at any time. You basically are following what I'm doing. So you're following a professional. I send out, when I see a trade in the weeklies, monthlies, leaps, stocks, and Forex, I send out alerts. This is what I am doing. This is what I am doing. Then, to reinforce this, every week I teach a members meetup webinar where we go over, and these are usually about an hour. They're recorded and put on the website, so if you can't make it at noon Eastern time, you can always go in at your leisure and listen to the recording. We usually give a lesson, and then we talk about our trades that we have on now and what we plan on doing with them, how we're going to manage them. And then on Thursdays and Sundays, I do a members review, and this is a video blog that talks about our trades. This was voted in as one of the top 10 blogs worldwide by FeedSpot. And then the final thing is all trades are posted. We've been doing this for 10 years, and on average, we have about 75% winners across the board. This is what members see. This is the members homepage. This is where you get all the archived members reviews on Tuesdays and Sundays. They're usually put on about 5 o'clock. And then every Tuesday at noon Eastern time, we have our members meetup. This is usually about an hour. This is posted on the website usually about 3 o'clock in the afternoon on Tuesdays. You can see we always post all our positions. You get our quick lessons, our trade walkthroughs, and then all our master classes are part of the members homepage. Like I said, this is the very best education you'll get on stock options. We specialize in vertical credit spreads, which I believe is the best to bring in consistent profits. I've been doing this for greater than 35 plus years. This is what I do to bring in profits on a consistent basis. Hope you enjoyed this video. Hope you join us. Bye-bye now.